Welcome to Trading in Sidebars on-screen tutorial for the anatomy of an inside bar trade. I'm your instructor, Frank Bunn. In this segment, I will show you exactly how to properly analyze inside bar patterns with the pattern key using the TC2000 platform. Let's begin. We will start with a quick review of the inside bar success equation. Remember the three primary components: pattern definition, technical requirements, and the trend determination, which is the context of impulse plus momentum. We will be using these three components to properly analyze and set up our trades. And we'll also quickly review the inside bar pattern key. Remember the four components: no price action divergence, the inside bar interval must be contracted, we need the proper expansion-contraction trend flow from point 1 into the IB pattern, and we do not want any trend divergence as dictated by the 3-6 MACD indicator. Let's begin by analyzing exactly what we need to see in order to determine a trade. Remember, we need pattern definition, the proper technicals, and the trend. Everything that we need is exactly here on the price chart with our tools. So we're going to begin by analyzing this inside bar interval on Boston Scientific. First, let's look at the pattern definition. This interval evolves inside the previous interval, making it an inside bar. According to the 3-bar pattern rule, this interval's high must be higher than the previous one, and we can see that it is. So this inside bar has the proper pattern definition. Next, let's look at the technicals. First, we do not want price action divergence, meaning that as many bars from impulse through follow through must trade through or test the 3 exponential moving average. Notice that the inside bar tests the 3 exponential moving average. The bar before it trades through. There is no price action divergence. How about contraction? The inside bar 3-6 MACD must be lower to have contraction. If we increase the scale of our 3-6 MACD indicator, we can clearly see that the inside bar is lower at this MACD reading than the point 1. Therefore, we have contraction. Next, we want to look for proper trend flow. So we want to see a higher MACD reading on the 3-6 going into point 1, and we see that here, followed by our contraction. So we have the proper trend flow analysis. Furthermore, we're looking for divergence. We do not want to see trend divergence, meaning we want our 3-6 MACD to be the highest high since crossing the signal line and the 0 line. We can see that 3-6 MACD crossed the 0 line back here, and we indeed have a higher high since it has done that. This makes the point 1 high confirmed. All 4 components of the pattern key are present in this IB pattern. Next, let's analyze trend in context. Obviously, the 3-6 micro trend is up over signal over 0. Our 1226 is positive and over the signal line, meaning we have the proper momentum. And the 5100, the long-term trend, is over signal and positive, meaning we have a long-term trend with momentum. That makes this inside bar pattern a trend trade long. Let's analyze our impulse. What happens into point 1? Here we can see that in this area we have an unfilled gap. So we can identify our impulse as that of an unfilled gap. Let's analyze a short example. We will be doing so with this short inside bar pattern on TECO Energy. Let's look at the pattern definition. We have an inside bar preceded by a point 1 with a lower low and a lower high than the previous bar. This completes the 3-bar pattern. Next, let's look at the technicals. Price action divergence. We can clearly see that each bar beginning with the IB through the 0.1 interval and back through impulse, has traded through or tested the 3 exponential moving average. So we do not have price action divergence. Contraction. We want to see the pattern contract or make a higher high on the 3/6 MACD from 0.1. We can clearly see that is the case here, and we have contraction. Next, our trend flow. We want to see expansion or lower lows on the 3/6 MACD before the contraction at 0.1. We can clearly see we have this lowest low expansion at 0.1. No trend divergence, meaning we want to see the lowest low on the 3/6 MACD indicator going into 0.1. We can clearly see that the 0.136 MACD reading is at its lowest low since the zero line was crossed. Let's analyze the trend in context. First, let's take a look at impulse. I have added the 6 exponential moving average, and I can clearly see that this inside bar pattern is the first reaction since my 3 crosses below the 6 in this short-term downtrend. Let's take a look at my intermediate and long-term trends. On the intermediate trend, I have an up counter trend. My 1226 is above 0, but I have down momentum. My long-term MACD with the 5100, I'm above 0, but I have down momentum because I'm below the signal line. Therefore, I have a micro short-term downtrend, an intermediate counter trend, and a long-term counter trend down. That establishes my context with the 3/6 crossover as my impulse. Here are 2 setups in Morgan Stanley, one that I want to trade and another that I do not want to trade. Let's first analyze this inside bar pattern. Although we have the proper 3-bar pattern definition, we do not have the technicals. Here we can clearly see that at the 0.1 interval and the bar which precedes it, the range has evolved over the 3 exponential moving average without testing it or trading through. We see that here, and we see it here. Next, we do not have contraction. Notice that at the inside interval, the 3/6 MACD is higher than the previous high. It should be lower. We do not have contraction. I do not want to set up this trade. It does not have the proper constructive momentum that I know will lead to an extended gain. Here, however, is an example of an inside bar trade in the same Morgan Stanley time and data series that I do want to trade. This inside bar interval can be analyzed as such. Here we have a proper 3-bar pattern with a higher high into the inside bar. Next, we do not have divergence. Every interval in the impulse and contraction is trading through or testing the 3 exponential moving average. We have the proper trend flow of expansion into 0.1 followed by contraction at the inside bar. And we do not have trend divergence. We have the highest high at 0.1 on the 3/6 MACD since it crossed the 0 line. Furthermore, we have an intermediate uptrend with momentum, and we have a long-term uptrend with momentum. Let's take a look at this short example in OKE. First, my pattern definition, my lower low at 0.1 from the previous interval, and the evolution of my inside interval. Next, my technicals. I do not have price action divergence. Each bar from momentum through the inside interval is testing or trading through the 3 exponential moving average. Furthermore, I have contraction. You can see that my 3/6 period MACD is higher than the previous interval. Next, I have the proper trend flow. I have lower lows on the MACD into 0.1, which precedes my contraction. Furthermore, I do not have divergence. I have the lowest low reading on the 3/6 MACD at 0.1 since the 0 line has been crossed. Next, let's analyze impulse and trend. For my impulse, I have 3 consecutive lower lows and lower highs into point 1. I also have an intermediate term downtrend with my 1226 MACD below 0, and I'm below signal, so I have momentum. On the long term, my 5100 MACD is below 0, and I'm below signal, so I have momentum. This is a confirmed downtrend inside bar setup pattern. We'll analyze another example of an unconfirmed trade that you do not want to set up using this inside bar interval. Notice that although I have no price action divergence, I have trend divergence. The high on my 3/6 MACD indicator at point 1 here is lower than a previous interval in the time and data series. Therefore, I do not want to set up this trade. Here's another example of an inside bar pattern. I have all the pattern technicals and the pattern definition from no price action divergence, contraction, proper trend flow, and no trend divergence. But in this case, although I have a confirmed uptrend on the intermediate term, I have a down counter trend on the long term. Remember though, I have momentum. Furthermore, in terms of impulse, I have 1, 2, 3, 4, 5, 6 higher highs and higher lows in my impulse expansion phase. These setups are exceptionally probable and are likely to produce gain. Here's another example in NEE in a confirmed uptrend. My intermediate is over 0 over signal, and my long-term trend is over signal over 0. Furthermore, I have the proper pattern definition and technical requirements to set up this trade. In this example, in PX, we'll be analyzing this particular inside interval. Notice that the pattern definition, the 4 technical requirements, and my trend momentum is all in effect at this particular setup. In this case, my long-term MACD is less than 0, so I have a down counter trend. Here's an example in the US dollar Canadian dollar Forex pair of an entry that I want to skip. We will be analyzing this particular inside bar right here. Although we have proper momentum and technicals, the trend is diverged. Notice that we have a higher high here on the 3/6 MACD and a lower high at point 1. This is divergence. I have a lower high on the indicator, but a higher high in price. This pattern is not confirmed. I do not want to set up this trade. These types of breakouts have very high failure rates. This concludes this on-screen tutorial for the anatomy of an inside bar trade. I'm your instructor, Frank Bunn.